All right, what's up, everybody? In this video, I want to talk about mortgages and whether or not you can still get a home loan. So stay tuned. All right, so in this video, I wanted to talk about home mortgages, what's going on in the industry, so we can get the real deal information of exactly what's going on. I know a lot about these mortgages, but let's go to the experts. So on this video, I brought in my buddy Greg. He's doing hundreds and hundreds of loans every single day, knows everything about what's going on in the industry. But real quick, if you're thinking about moving to, from, or within San Diego, don't be shy about getting a hold of me. I'm getting tons of emails, calls, and texts, and I absolutely love it. If there's anything I can do to help you with your or reach your real estate goals, I will 100% make it happen. And if you get a second, make sure to tap that subscribe button. If you want to learn everything about San Diego, like where to eat, sleep, work, live, play, everything you could possibly need to know, I've got everything for you. And don't forget to tap that little bell. That way you're notified every single time I put out a new video. All right, so what's up, Greg? How's it going?
Going good, Wes. How are you?
Pretty good, thanks. Pretty good. Just trying to, just like everybody else, just getting through all this COVID-19 madness. And everything else, all the happenings that we're all dealing with at this time. Thank you so much for hopping on this video with me and talking about what's going on with the mortgage industry and if you can actually get a home loan. Hearing everything and anything on the news, don't know what to believe. So I 100% appreciate you hopping on this video with us and giving us some of the real information on what's really going on.
Yeah, it's my pleasure, Wes. As always, man, I'm happy to do it.
Very cool. Very cool. Okay. Well, so let's hop right in. I know one of the big things that I keep seeing everywhere, and I'm getting a lot of questions, and I'm sure you are too. What's going on with as far as like mortgage forbearances? A lot of people are out of work now. A lot of people are struggling to make those mortgage payments. You are seeing a lot of forbearances happen. What's the deal with those?
Yeah, I love you open with that because it's probably the number one question on most home buyers' minds is what's going on with people that own a home already? What are the banks doing to ease the burden of maybe job loss? How are they accommodating people that may be slow to pay or having trouble to pay? Yeah, and sincerely speaking, they've put out some good protocol, but not a lot of instruction. And what I'll tell you I'm seeing on the ground floor is forbearance doesn't mean forgiveness. And that's something that we need to understand right out the gate. If you go into a forbearance with your mortgage company and you agree that you want some time or a little bit of gap in making your mortgage payment, they're going to grant you without any questions asked really right now, 90 days, meaning you could skip months 1, 2, and 3. What they're not telling you or what's come to light is that on month 4, you're going to be due for all of those 3 payments. So if you had any trouble making months 1, 2, and 3, it's going to put people in a bind to be able to come up with all 4 payments at one time.
Oh, wow. One time.
Yeah. And, the second thing is they're trying to figure out still how to report this on credit. We saw in 2008, a lot of people did the short sale, the loan modifications, because not necessarily they were forced into it, but it seemed like a good idea. And why not? And because of that, you saw a lot of people's credit really get hit. So I would advise anybody to make whatever arrangements they can to protect the equity in their home, to keep current with their mortgage payments. Only enter into a forbearance if it's a last-ditch effort and there are no other options. I would just hate to see somebody struggle to come up with 4 mortgage payments all at one time. I know personally, I rarely have that much liquidity on hand to be able to make something like that happen. So even using a little bit of savings, but the bank is making these available. If you need it, it's there for you.
Okay. Yeah, that's crazy. I mean, that's almost like you're looking at 4 mortgage payments. I mean, that could almost, sorry, everybody. The camera's moving a little bit. Yeah, but it will be over. Just give it a couple seconds. Yeah, that's crazy. I mean, 4 mortgage payments at once, it's almost like a small down payment.
Most people don't understand it because they think it's being tacked on to the end of the loan. But your taxes, your insurance, these bills are still going to be coming due. And if you impound it for escrows, you're going to have to come up with that money all on month 4. And, in some cases, you might be able to drag that out over the next 12 months. But the big thing we're seeing right now is if you do enter into a forbearance and you do go late, you will be made ineligible to refinance or purchase for 12 months until you bring that current.
Oh, okay.
Something to know, yeah. Something you wish they didn't bury in the fine print and they just told everybody, because most people would just elect to continue making their mortgage payment if they can. But certainly if you cannot, that's an option for you.
Right. Okay. Yeah, it's not, I mean, some people are going to need that option.
100%.
Yeah,
It's there for them if they need it.
Right. All right. So as far as anybody maybe who's in the home purchasing process right now, maybe they have a mortgage pre-approval or a loan pre-approval from you. Maybe they're about to hop in and get that mortgage pre-approval so they can actually start the home shopping process. Has anything changed as far as what they need to do to get that process started?
You know, that is a question we might need a whole segment to cover. But
Right.
but the truth is that I call it unusually doing business as usual. A lot of banks out there have changed requirements that have made it very difficult for first-time home buyers to buy. Chase Manhattan, some of the largest big blockchain banks, retail banks, have said that you need a minimum of a 700 FICO score and at least 20% down to buy a house. That alienates about 40 or 50% of the home buying market. First-time home buyers, they need lower down payments. They need a little more flexibility on their credit and FICO scores. I'm happy to report that Cross Country Mortgage hasn't made any of those changes. We're one of just a handful of banks in the country that sells directly to Fannie Mae, Freddie Mac, and Ginnie Mae. So in short, if the government hasn't changed the guidelines for their loan program, we are not adding any overlays. So we can go as low as a 580 on a FICO score on FHA or VA, and we can still allow for as little as 3.5% down. We need to go through the same steps that we normally would, and some things that we've added to that. Verifying of employment. We certainly want to make sure that you're working still and have the ability to repay the mortgage. But we're still allowing for gift funds and doing a lot of the same things we were doing before. It's just at this point, we want to make sure that we do check all the boxes up front when you get pre-approved before we send you out shopping for a home. I think that's most important.
Gotcha. All right. So, and as far as this is a question I get a lot, just as far as, when I meet with home buyers for the first time or maybe a move-up buyer, that type of thing. But
Sure.
Are down payments still generally 20%, or has that changed during COVID-19, or how is that looking?
That's a great question. Like we just touched on a bit, the big banks are requiring a minimum of 20% down and a minimum 700 FICO score. That's simply just not the case. We can take as little as 3.5%, 5% down on conventional homes, and our FICO score requirement goes as low as 580. So case-by-case scenario, but we can certainly allow home buyers in for less money than 20% down. That hasn't changed. Okay,
cool. Yeah, I know that helps a lot of people out. I think you definitely answered part of this question, but it's something that's kind of been in my mind because I've been, I'm being in the industry, I probably know, or I like to think that I know a little more than probably the average person as far as the way mortgages work and the home buying process works. And I keep seeing that, like you mentioned earlier, Chase, essentially dropped out of the mortgage market. I know that, they've raised their qualification or the qualifications they require, but essentially you've eliminated a huge portion of the people that need a loan. Further, do you see the banks and lenders, like maybe you're a company, for example, do you see qualifications continue to be more strict? Does it vary per company, case by case basis? What's your prognosis?
Yeah,
mortgage industry.
100%. Yeah, I get that a lot. I mean, it's hard to make sense of all this unless you have a 6-year, 4-year degree from Wharton School of Business in macroeconomics. It's hard to understand what the banks are trying to figure out. And the simple answer is yes, I expect people to be dancing on water for the next 30, 60, 90 days in the mortgage business because they're unsure of how many people are going to be entering into the forbearance, how many people are going to be making those mortgages. So there's a liquidity issue there. So what they don't want to do, the big banks and the banks don't want to right now lend on products that have a high likelihood of default. That's number one detriment to the real estate market would be people not making their mortgage payment and going into some kind of a foreclosure or such. So what you're seeing right now is a lot of good loans are still being made. Home buying interest is up, up, and up. Like I think it's
Sure.
year over year, it's actually higher. The demand for a house, people are realizing staying at home that they need their own space, right? And what better way to accentuate that than to be quarantined in your apartment? So people are wanting to get out there and rebuy. And so we're seeing that the market is still moving right along, but the banks are having a little hard time catching up because they're just a little bit unsure about some of the paper that's already been written. So with that being said, they're going to make small adjustments along the way to make sure that they're minimizing or mitigating the risk to the bank. Hey, I'm the guy that I'm in line to help the consumer, right? That's what a loan officer does. I'm not the guy that at the end that writes the check. So what I try and do is just kind of be that happy medium between the bank that's writing the check and the client that needs the money. So what I'll help you do is I'll look down the road, 3-6 months and make sure that if we're out shopping for a house that we have maybe already accounted for any hurdles that might come our way with a pre-approval when we tell you, hey, we can get you financing for your next home. But think about it like this. It's verified income. It's verified assets. The better the credit score, the better the quality, the more likely that we'll be able to keep your loan.
Right. Okay. Makes sense. Yeah, I know we just, just last week, I think it was, we just updated one of our pre-approvals. I mean, I had a pretty good idea that that particular buyer was probably okay, but I was also be on the safe side. It's always a good, double check, just to get an updated pre-approval just to make sure.
And how long did it take us to go ahead and reconfirm that opportunity was still good to go?
Minutes, right?
Yeah. So I encourage everyone.
It didn't take very long.
No,
couple updated documents, and that was it.
100%, yes.
Okay, so this next question kind of speaks to lending specifically, as far as right now during this COVID-19. Are there more risks to getting a mortgage or a loan right now?
Not necessarily. One thing that we're doing is they've changed a couple of the business practices. We want to support social distancing. We want to support everybody's safety, health, and well-being. And we're doing some things a little bit differently than we did before to make sure that people can still buy, sell, and refinance their homes. One of those things being drive-by appraisals. We're certainly taking steps, Fannie Mae and Freddie Mac, to be able to allow an appraiser to drive by your home and get the value, right? You don't necessarily need to go into that home like we did before. Second of which, we are offering closings that are going to become virtual, meaning you don't have to sit down with a notary and have somebody thumb through the paperwork with you. They're going to allow for you to electronically sign your docs. That's coming in the works, and it's coming up quickly.
Wow, that's a big change.
That is a big change. It's been around for a while. It just hasn't been adopted fully. And given these circumstances, I think you're going to see a lot of people talk about going back to normal. I think it's going back to a new normal that we'll see in this market or just in our everyday lives. It's going to take a little bit for everybody to feel comfortable doing some of those things. But it's certainly not slowing people down from buying houses. And what I'm hearing is most people really appreciate having these additional options to make sure that their family and friends stay safe.
Right. Wow, the mobile notary.
Right.
Or not the mobile notary, the virtual. Or the
virtual notary, yeah.
I did a video a few weeks back. If you want to check out the video, it's right here. And one of the things, this process is essentially, you can buy a house from your living room couch, basically. But the one aspect of it that I mentioned that's probably no way to get around coming in contact with somebody else during COVID-19 was the fact that you're going to sign loan docs. You're going to have maybe a mobile notary, and you can control that environment as much as you can, but that's something you really couldn't get around. But you bring it, you start doing virtual doc signing. Wow. You don't
even have to put pants on anymore, Wes.
Yeah, that's 100%. That's 100% virtual. That's cool. I had no idea.
It's coming. That's coming down the pipe. They're doing those things, and I think it's a long time coming because you can move money from account to account from the couch, in your home without ever having to see or have somebody verify with a thumbprint. why not allow people to do those retinal scans right from your
Yeah.
the comfort
Yeah, it
of
makes sense. It definitely makes sense. As far as a lender or on the lending side, what advice would you give maybe a first-time home buyer thinking about hopping in? Do you have any specific advice that you would give to maybe say a first-time home buyer as far as a mortgage?
Yeah, it's no secret. I follow the market. I have done so for 21 years now. I look at fundamental technical trends. And, one thing that's different than anywhere else in the world, Southern California is one of the most desirable places to live on the planet. There's more interest and more demand to live here than anywhere else in the world. That has not changed. So my advice is the same to anyone. Is you're either making your mortgage payment or somebody else's. The only thing going up faster than interest rates going down is rents. Landlords are charging more. So with that being said, Warren Buffett said it best just the other day in a podcast that I was listening to, and he said, in times of adversity, you'll find opportunity. And I think that really holds true. And he says, when most people are fearful, I'm a little bit greedy. And he says, when I find most people a little bit greedy, I'm a little more fearful. I think you see an opportunity right now that may be very short-lived to find yourself a slightly better deal. Right? Maybe it's a few $1,000s towards your closing costs. Maybe it's a seller that's already bought another house that really needs to offload that second mortgage that he doesn't have any intentions of. But for right now, I think people have adapted very well to working from home. I do not see a correction coming in this market. Maybe on the higher end properties that are $1.5, $2 million. But for the most part, financing's available. People are taking action, and we're finding ways to virtually close deals just like we always had. And when things do go back to the new normal, I assume with real estate being a lagging indicator that we never really feel the full impact of some of these businesses that maybe had to stop or close their doors for a short while. So the opportunity is still as strong as ever. I wouldn't hesitate. First-time home buyers, the proof is in the pudding. The average net worth of a home buyer versus somebody that's renting is like 600% higher. It's the focal point, or at least the beginning point for most people when they're building their portfolio. Real estate.
Yeah, that makes sense. It's great stuff. This is great information. I love the Warren Buffett. I love the Warren Buffett quote.
I love Warren Buffett, man.
Yeah.
That guy's brilliant.
Yeah,
Old Omaha.
Yeah, he's amazing. I love that guy. So another thing I'm kind of, as far as on the real estate end, I get this question a lot, and I definitely have some strong opinions on it. A lot of clients or, potential buyers, they're just family members, friends in general. They're just kind of always wondering, a common question is, how's the market? But a lot of them are wondering, hey, given the state of the economy, the market, should I hold off on buying a new home or a condo right now? And then, of course, on my end, I get, the same question. Just generally speaking, as far as a buyer is concerned, what are your thoughts on this?
Yeah, so I think as a buyer, you have to look at what your goals were with home ownership, right? Have your goals changed because of what's going on? In most cases, the answer is no. Home ownership is a long-term investment. You need to not be looking at home ownership as a short-term investment vehicle, right? Where we're going to buy a house and then we're going to retire in 3 years because it made us so much money. The truth is that if we average 5, 6, 7% growth, which is really nominal for San Diego, over the course of the next 5, 6 years, that's like 50% on your money. Be thinking long term. I wouldn't hesitate. Right now is the time to try and get in there and negotiate a couple grand off the closing costs with your lender or with your the seller of the home. Maybe they're willing to kick in a little bit of money for you just because they want to close quickly with and they want to make sure things go fluidly, right? That's where I see this opportunity, because if you go back just 6 months ago, Wes, the sellers were there was so much demand and people were kind of fighting back and forth over price, and you get into these bidding wars and you're overpaying for that house, which that's the market we were just used to. So right now you're still at a very balanced market.
Yep.
which favors the buyer just a little bit, and maybe they can use that to leverage in a few $1,000s to help with closing costs or buy some new furniture, some new paint when they move in. That opportunity wasn't there for people that bought a year ago. So I like that option now. And I think if you plan to stay in the home for the next 5 to 6 years, you're going to be very happy that you did so.
Yeah, that's so true. In fact, another video I'm working on right now that updated San Diego real estate market stats were just published. They're usually published on the 5th or the 6th. So they came out late afternoon. And it's crazy. So, I mean, you're definitely seeing the inventory levels are still kind of in that seller's market range, but there's less buyers, right? And it's only going to last for so long. So, I mean, the buyers that are in the market right now are just in a great position because they're not, there's just less competition. And it hasn't been like that in San Diego, Orange County, LA, and most markets. It hasn't been like that probably since 2012. Yeah. And I think the people are really on the ball, and the real serious ones are just like, this is great, because like, just to speak to what you said, I mean, you're bidding against, there's just a lot of competition. The best homes were getting multiple offers, very difficult to get that home purchase completed. But yeah, it's interesting market. Inventory levels are low, which is great as far as home prices. And, but, as far as a home buyer, it's also great because COVID-19 is keeping some people on the sidelines. So
100%. Some people are waiting to, see where the dust settles. Some people can look down the road a little bit further. I think we pull out of this a lot sooner than anybody had predicted. I think by first or second quarter, it's all going to be in the rearview mirror, which means you only have a very short window of opportunity right now for people to be able to take advantage of this opportunity, which is, hey, maybe with a little less competition, I can work myself a slightly better deal. And if that's the case, it's going to be short-lived, maybe through the end of the year. Rates will stay low through December, through an election, and then we're off to the races. And wow, the projections and the forecasts I'm seeing over the next, 24 months, 36 months, 48 months, it's something to get excited about.
Yeah, that's good stuff. I feel the same way. I live in the stats, the real estate market statistics. I live, path is in the math, right?
Right.
I'm always updated. I'm always making sure that I know exactly what's going on with all the most important indicators, the numbers, and it looks good, right? I mean, you just have, like I said before, you just have low. It's all supply and demand. There's still just not enough home inventory.
And it's important to remember, Wes, that we're not talking about places that are technologically inept, right? Most people in San Diego or Orange County or San Francisco are very accustomed, technology-savvy people that can work from home from a long periods of time. So most have adapted already to that environment where I can take my laptop and work from the back patio, right? So there's not going to be this impact on the real estate market here. There's going to be pockets that are affected a little bit differently around the U.S. But certainly we're talking about a local market, a local community, Southern California, that's just a little more resilient in some areas than the rest of the U.S.
I mean, this is this pandemic is awful. I mean, everybody is struggling with the changes, and but definitely, like on my end, I'm just trying to make the best of it. But I am grateful that technology is where it is.
Sure.
It's amazing what we can all do for a lot of it. Most industries, what you can actually do from your own, your own home office, your own couch. It's incredible.
And I've talked with some people too that said that, the number one drawback sometimes to living in the big city, Los Angeles, is traffic, right? You eliminate traffic if more people are working from home, which will probably be the new norm. And now I don't know if we have anything to complain about out here because the weather's so nice.
No, that's good. That's a very, very true statement. All right, Greg, this has been awesome. Dude, thank you again so much for hopping on this video. Tons of great information. Just before you go, I just have one final question. It's something I get all the time. I'm sure you get this question all the time. But what do mortgage interest rates look like, and what have they changed? What what are they looking like during all this craziness? Because we not only, I mean, we've got COVID-19 happening, we have all the stock market volatility, the unemployment, all these economic changes happening. What are they looking like from your end?
Yeah, that's a great question. 21 years, like I mentioned earlier, I've been doing this. Rates have never been lower. It's like the easiest answer. I love getting this question. We're thrilled about. I mean, you literally can buy $1 million house right now for a $5,000 mortgage payment. I mean, it's unheard of if you're not. So rates right now are in the low threes. 15-year fix are in the mid twos. You know, there's a few variances in there, you know, but most people are just ecstatic about what their payment and rate look like. We expect things to stay about flat, not a whole lot of volatility between now and the end of the year because it's an election year. And typically they'll want to keep status quo. But yes, with everything that's happening in the market, everything that's happening with the pandemic, mortgage-backed securities, buying in and out of the market, as people take money out of the stock market, which you're seeing, they put into the bond market. So you have very low rates as a result of this. Yeah, I mean, if it's got a 3 in front of it, I'm just tickled, man. It's really, really great for everyone. And we do not expect over the coming years for rates to be anywhere near where they are today. So I would hope that this stays in place for about another 6 months. And then I imagine next year we start seeing things go back to normal. And normal is about a 6% interest rate. And of course, if you double the rate, you double the payment, right? So there's a lot of savings to be had right now by locking in on these low interest rates.
Right. Because I know I've heard like any change or any uptick in that rate just cuts into affordability. So
100%.
you know, it's
absolutely.
yeah, that's good. That's great stuff. It's good information. All right, Greg. Well, thanks again. I appreciate you hopping on this call. I know you're busy. I know you're doing tons and tons of loans. So I appreciate you taking the time to do this video with me and just, you know, help get the right information out there.
Wes, I got to thank you for having me on. I couldn't appreciate it anymore. You know, we've been working together obviously a number of years, and I'll tell you what, working with you is always a joy because the process is so simple and you really know how to hold the hand of the buyer right through the process. Whether you're on the seller or buyer's side, you're a real pro, man, and getting this information out to your clients shows how much you care. Thanks for having me on, brother. I appreciate you much.
Yeah, and just so everyone knows, I'm going to include Greg's contact information below in the summary. So if you have any further questions, detailed questions, any specific questions or situation, you can reach out to him. So, and he's like me, it's absolute no pressure, no obligation, non-salesy approach to this business. Just
no, you got to work with me, Wes. If you call me, you have to work with me. Just kidding. Yeah. Happy to answer any questions for any of your subscribers.
Yeah, right on. Appreciate that. All right, guys. So I hope that you found this video helpful. Hopefully that answered some of your questions as far as what's going on in the mortgage industry and what things are looking like. I know we are getting tons and tons and tons of information from all different angles, different websites, different news sources. It's hard to know what to believe, what not to believe. So hopefully you found that helpful. And if you're thinking about moving to, from, or within San Diego, don't be shy about getting a hold of me. I'm getting tons of emails, calls, and texts, and I absolutely love it. If there's anything I can do to help you reach your real estate goals, I will 100% make it happen. And I'll see you on the next video.